Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
After grounding its fleet last year, in recent months, Cruise has been in talks with officials in 20 metropolitan areas where it previously ran cars or had started mapping in preparation to run them. Norfolk Southern says it will pay $600 million to settle lawsuits over its train derailment in Ohio last year that spilled more than 1 million gallons of toxic chemicals and sickened residents. And with more on the story, here's Bloomberg's Erica Herskowitz.
Charlie, the Atlanta-based railroad company said it had agreed to resolve consolidated legal claims pressed by as many as 500,000 residents, property owners, and businesses in the East Palestine area over the disaster. The February 3, 2023 derailment of a freight train released dangerous chemicals such as vinyl chloride, considered a carcinogen, and prompted an evacuation of local residents. Shortly after the accident, Norfolk Southern launched a controlled burn of the chemicals to mitigate the explosion risk. East Palestine residents blamed the resulting cloud for headaches, lingering odors, and pet deaths, and said the incident had led to increased cancer risk. Charlie?
And that's Erica Herskowitz reporting Norfolk Southern shares up today by 1.1%. Analysts at Robert W. Baird say Tesla may be heading for another vehicle sales decline this quarter after surprising investors with a drop in the first 3 months of this year. On a mixed day for stocks, Tesla shares, they're up now by 2%. And those are some of our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
And I'm John Tucker along with Molly Smith, in for Tim and in for Carol, who'll be along in just a few minutes. Anyway, there's this fascinating story on the Bloomberg that just crossed a little earlier today about being data dependent. We're all supposed to get the same data from the Bureau of Labor Statistics on which to make our investment decisions, and which the Fed depends on for its decisions. It appears, though, there's a super users group. Tell us more about that, because the byline is by Molly Smith.
Must be some other girl. But
No.
I'll try. So
Talk your own book for a minute.
yeah, we've had this this story going for a while now. It's been a bit of going back to February when this started, that there was an email sent out by an economist within the BLS that was addressed to, quote, super users. And naturally, that got everybody wondering, who is a super user? How do
Yeah,
I
that gives
become
the
one?
impression that like some people get better data than the rest of us.
Right, which of course is not BLS protocol. This is a public government agency. All of their information is meant to be equally accessible to everybody on the website. And it turns out that this economist, at least in one instance, did disseminate information that was not public at the time to some users who he has called, quote, super users, which the BLS as an agency does not maintain a list of, but it appears that this one economist did maintain his own list and that he called them his own, quote, super users. So like you said, yes, it raises questions about the equitable access to economic information. This is all really key data that Fed policymakers rely on, that investors trade upon, and it just makes you wonder, like, is it all out there equally and fairly for everybody, which is the BLS's goal?
How do they respond? We're not going to do this anymore?
So the BLS has said it's maintained that it does not keep a list of super users itself. They've acknowledged this is hugely embarrassing for them. They're going to be, retraining their people and making sure they're fully, debriefed on protocols of how to respond to user inquiries, what needs to be signed off on, what needs to be escalated. So this really has just triggered this whole, for them just looking back at like making sure that their people are trained and that we are not sending out information to people selectively.
Molly, great story. Thanks. Bloomberg Business Week continues. Carol Massar, Tim Stanovic, live from the Schmarsh Connect event right here in Manhattan. For Molly Smith, I'm John Tucker. Thanks for listening.
It's 3:58 on Wall Street. We do check markets all day long at Bloomberg. We have got the S&P 500 index swinging between gains and losses as we race toward the closing bell. The Dow Jones Industrial Average in the red right now. We've got the Dow down 48 points ahead of the close here, lower by 0.1%. S&P now higher by 1 point, but again swinging between gains and losses here into the close. The Nasdaq Composite Index up 31 points for Nasdaq. That is a gain right now of 0.2%. The Nasdaq Composite Index at 16,286, with the S&P holding above 5,200 at 5,204. Markets have been tempering bets on Fed cuts as U.S. economic data remains strong. Officials are pushing back against the need for easing, and of course the all-important CPI report coming up tomorrow morning, 8:30 a.m. Wall Street time. And yes, complete coverage and analysis as you have come to expect over the years from Bloomberg Radio. Now, what about the market backdrop? Nancy Dowd is a private wealth advisor with Ameriprise Financial.
I mean, we saw a couple of days of downturns in the last week, and of course now that's happening again. I think a good chunk of that could very well be some profit taking.
Boeing shares ahead of the close down 1.9%, falling to its lowest in 5 months after the New York Times reported that the Federal Aviation Administration is investigating an engineer's complaint about safety issues with its 787 Dreamliner aircraft. The whistleblower is a Boeing employee who worked on the plane. Again, heading into the close, Boeing shares lower by 1.9%. And there you have it, sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Tuesday. The Dow lower now by 9 points, little changed on the day at the close. S&P up by 7 at 5210, a gain there of 0.1%. The Nasdaq Composite Index up 52, higher by 0.3%. Briefly, Apple upgrading its presence in the Miami area, following other big tech companies and setting up outposts or expanding in South Florida. And Carnival Corp is listed for sale its sprawling headquarters on the outskirts of Miami. S&P higher by 7 points, ending the session 5209, up 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stanovic on Bloomberg Radio.
And a very good
afternoon, everybody. We are live on Bloomberg Business Week. Carol Master along with Tim Stanovic. We are streaming on YouTube and Bloomberg Originals. We have come out of New York headquarters for Bloomberg, and we are live in Midtown
Just
Manhattan.
went across town a little bit.
We did. We took a cab, so don't judge us. A quick little ride, but we are at the Smarsh Connect conference here in Midtown Manhattan. And we're going to have more on that over the next couple of hours. It's this great collection of dealing with something that is so important to the financial industry, and that has to do with compliancy. More global rules around the world, if you will, when it comes to financial firms and how they interact, digital communications.
Yeah. Some great guests coming up from Amazon Web Services, AWS, EY, and of course from Smarsh as well. Hey, markets did just close. There was a little bit of buying into the close today. The S&P 500 closed higher by 0.1%. The NASDAQ by 0.3%. The Dow, a very small move lower. For more, let's bring in Jess Metton, Deputy Team Leader for U.S. Equity. Good to have you with us. Give me, I don't know if you can hear. It's very loud.
It's kind of the power of God for you. Or the voice of God, I should
everything.
say.
Yeah. Jess, how did you look at the
this is what
buying
happens
into the
when it's
close?
live.
Hey guys, it's interesting today too because we did see the S&P 500 briefly break below 5,200, but if you look at the closing around 5,209, and also Nvidia coming off those session lows. NVDA is the ticker symbol on this, but still that stock was down about 2%. But even with that, you've seen other gainers today beyond that. Even when you think about a weighting, like when it comes to Nvidia, the third largest weighting in the S&P 500. If you look at some of the biggest point contributors here, you're looking at some of the amongst kind of the losers of and bigger decliners in the first quarter actually being some of the gainers here. So you're seeing a flip here. So Apple, Tesla, also if you're looking at Alphabet, those are among the biggest point contributors to the S&P 500 today, even though we did see a steep decline there in Nvidia, guys.
Okay, so let's talk a little bit about some of the sectors that gained. I mean, real estate, the outperformer, significantly higher by 1.3% on the S&P 500.
A lot of green if you look at the IMAP function on the Bloomberg.
Yeah, what's going on there?
That's right. So you are seeing some of more of the unloved corners, especially in the first quarter, sort of picking up steam there. And then, of course, we have to point out a lot of this trading going into tomorrow because, as you know, we do have that CPI report coming in tomorrow morning at 8:30 a.m. in Washington time there. But what's interesting when you're looking at the trade today, and I was actually talking to Chris Hart-Murphy about this over at Susquehanna. He was pointing out how if you're looking at some of the price action today, especially if you're looking at crude oil falling and then also the 10-year yield pulling back to the lows of the week, that would suggest that some investors are preparing for potentially a cooler CPI number tomorrow.
Well, that's what the survey of Bloomberg economists says, but we have been fooled before, right, Jess? So, I mean, this is the conversations I'm sure you're having with your sources, and we certainly have been in and around the Bloomberg newsroom, that if this report comes in hot or hotter than forecast, I mean, there's certainly room for us to maybe push 4.5 once again on that 10-year, which would be substantial. If it disappoints to the downside or maybe, is a weaker number, then we could potentially see that 10-year Treasury move down. It's just, again, the sensitivity, if you will, all along the U.S. Treasury curve.
That's right. So on a monthly basis, if you're looking at the overall, in the core reading, which excludes that food and energy costs, it is projected for CPI to have risen by 0.3% in March, down from 0.4%. But when you look at the options market specifically, so Stuart Kaiser over at Citigroup, who leads their trading desk there, was talking to him about this. So if you're looking at what's happening in the option market, it looks like as far as what traders are betting, potentially more sharper swings than usual, and that's just because the last couple of reports have come in a little bit hotter than expected. So the implied move for the S&P 500 is about 1% in either direction, and to put that into context, that would be the biggest implied move for a CPI day since last May. And again, that's just because we've seen some of those numbers pick up a bit. But if you look back to last month's report when it did come out, I think it was a little bit of a head scratcher at first for some people because you did see the numbers come in a little bit hotter than expected, but then you saw the S&P 500 rally more than 1%, and a lot of that was just driven because super core inflation. We know that Powell's looking at that, and when you take housing out and looking at wages, that was something that edged lower on a month-over-month basis.
All right, good update and close on the markets. Jess, thank you so much. Bloomberg's Jess Mettenbach at Bloomberg headquarters in New York City. All right, we do want to get to our first guest. A little bit of a setup because we've been thinking a lot about Jamie Dimon's annual shareholder letter. And in it, the JP Morgan CEO devoted a big chunk to artificial intelligence and AI and the importance it will play to Wall Street and his business in particular, and for society at large. The bank identifying more than 400 use cases for the technology, including for fraud and risk, which is kind of a great topic of discussion, certainly when I think about where we are right now. Tim.
Yeah, that fraud and risk component is really big, especially since the great financial crisis. Financial firms have seen growing rules around compliance, the policies and procedures that financial institutions implement to adhere to global financial industry standards of conduct.
Yep, that's where Smarsh Connect comes in, and we've got a great guest to get us going right here on site with us. Let's get to it. Thank you for being patient.
Oh, my pleasure. Thanks for having me.
Steve Marsh is with us. He's chairman and founder of Smarsh, and joining us here on site. First of all, compliance is a big issue, and it has been growing, I think, coming off the great financial crisis. And I think it's interesting to hear how people are talking about it in regards to AI. But first of all, take a step back 20 years ago when you started your company and kind of where we were.
Sure. So it was probably 2001, I think, when I first started Smarsh. And
so 23 years.
Well, yeah.
And then some.
Yeah, the time flies. But yeah, really, I was doing some consulting for financial services firms and had a few of them all around the same time ask me to help them comply with what were then relatively new rules and requirements, forcing them to capture their email. So it was really just email that was a problem, and most organizations just needed to find a way to retain it so that the compliance departments could produce it when a regulator came asking for it. And I helped a few of them do it and eventually found that there was a bigger and bigger business opportunity, and that's how it all started.
What was the way that you were able to do it back then that other people weren't doing? What was the value add that you brought that the industry wasn't seeing yet?
I think the biggest value add was that I had come from the financial services industry, and a lot of my competitors at the time, and there were quite a few, were really web hosting companies or internet service providers that thought they would just get into the email retention space and sell an additional product. We were very different from day one, only focusing on broker-dealers and investment advisors and really understanding the regulatory requirements that they had to comply with. And that gave a lot of the companies that we worked with much more comfort that when a regulator came knocking on their door, we would understand exactly what needed to be done, the steps needed to be taken, the proof of the steps that we're taking in helping them retain their compliance.
It's interesting, Steve, if you think about it, right? Like in terms of where communications were 23 years ago and how they have evolved. We communicate, and then layer on the pandemic on top of it. Things have gotten much more complicated. How has that changed your business and what you guys do?
Well, early on, as you alluded to, it was really just email that companies needed to deal with, and then eventually it was AOL Instant Messenger, and of course Bloomberg's messaging protocols as well. So, over the last 2 decades, that list of relatively few communication channels has exploded to now include well over 100, 150 different types of communication. And some of the largest organizations that we serve will have dozens, 50, 100 different types of communication use. So that has created a lot of opportunity for us to develop new products and new solutions to help our customers, but it also creates a lot of challenges for those that have to work with them.
I always think about in COVID, right? We were talking about, in terms of spreading the virus, like the touch points. And I just think about in terms of the financial community, the touch points, as information is shared and moved around, they have increased. And that means greater risk, potentially.
Absolutely. I mean, you have to look at all those different endpoints. You may follow a conversation that starts on text message and then moves to email and then is picked up later on WhatsApp or some other communication channel. If you don't have a good sense of what's happening in your organization, you're not going to be able to follow the entire conversation. It's not single-threaded anymore. It's not just taking place in one venue.
Okay, so a big issue with the SEC has been so-called disappearing message services. How do you guys deal with that?
Well, there are certain ones that were designed specifically not to be captured and retained. There are others that we can help with from a technology standpoint. If something is specifically designed not to be viewed and monitored, I think that's where policy comes in for most organizations. But wherever possible, we develop different mechanisms of capturing the messages so that they can be stored in the archive.
What if you're working with an organization where, okay, yes, my work accounts are ones that can be captured, but a lot of my communication happens over my personal devices or my personal services? How does that work?
Again, it's kind of nuanced. It depends on the communication channel. Some of the early social networks introduced that very problem where with Facebook, for example, you only had a personal profile. And if you were also using it for work, well, that meant that the organization had to effectively retain your personal communications, and you had to authorize them or acknowledge that you were going to use something like Facebook for personal and business communications, and you'd give the firm basically the ability to capture them.
One of the things I love about that we kind of try and do at Bloomberg, and I think we do it pretty well, is just kind of open windows into worlds that maybe people don't know about, but is just such a big part of our world. And we did it today with an earlier story, had to do with drones and so on and so forth. But I think about this is such a part of the financial world, and in kind of reading in, Tim and I think 19 of the world's largest 20 banks are your clients. Like, this is something that every financial institution is involved in a big way and has to be.
Absolutely.
In terms of what you do and the services you provide.
Yeah, it's not always the most well-known service, among the public, but every broker, dealer, investment advisor, bank, hedge fund, really has some regulations they need to comply with, and we're there often behind the scenes as one of their most critical partners.
Is it getting more complicated? And I think about with financial disruption, and I think about kind of what we've seen in cryptocurrency and how I don't know, the financial industry. It's just like more and more things are being thrown at them in different ways. And I always think about, is there regulatory oversight and the systems in place to kind of keep up with it?
It definitely gets more and more challenging, and I think over the past 2 decades, it's gotten to the point where the compliance function is probably one of the most sophisticated within a financial services organization. I certainly don't envy some of the professionals that have to deal with other aspects of compliance, that Smarsh doesn't even really touch or play in. So it's a challenging job, and it's a significant area of focus for the financial industry.
One thing that's so interesting about what you do is you have so many different clients, you have so many touch points on the economy. And one thing that I'm interested in is, here we are in 2024, where it's sort of like if we were doing this a year ago, the question would be, okay, when's the recession? But the economy, it seems like, is firing on all cylinders right now. What are you hearing? And certainly that's what the economic data is indicating to us. What are you hearing from your customers right now when you're talking to them about different products, different services, when it comes to how they're doing?
In terms of how they're doing?
Yeah, how they're doing.
Because you wonder, do they pick and choose and say, compliance they have to do, but do they pick and choose a little bit because they're a little bit worried about the outcome, or do you never see that?
Most of the conversations we have are more specifically related to their compliance and technology challenges, the types of communication tools they're using. Maybe we'll see a little bit in terms of how they're expanding or contracting the organization, but not even really. We don't always have a great sense of that either. So as far as their views on the economy and what's happening globally, and we don't get too much of that. It's more focused on compliance.
Does crypto come up? How much does crypto come into your world as well?
It does, and I think there was quite a bit of buzz about it, especially a year and a half, 2 years ago, about how crypto was going to be regulated, and really for us, what is Smarsh's role? What are our clients' role in that? I would say it's not the biggest issue, but it's still in the background. There's a lot more discussion today about artificial intelligence and how it should be regulated and how it can be used to help with communication, monitoring and surveillance.
We're going to have a bunch of conversations about that. How are you guys preparing for it? I know we're going to have some future conversations that are going to dig a little bit deeper into it, but how are you guys getting ready for it, or how have you been planning around it? Or what are your clients saying? Hey, Steve, are you working on this?
Yeah, we've had an aspect of artificial intelligence as part of our services for many years, and really it's to address the reality that the data volumes just are growing constantly. So our customers are faced with a challenge where they have to sift through not only a growing number of communication channels, but the number of messages that are sent within each of those has grown exponentially. And it used to be that human beings could inspect and look at the messages that would get flagged for some sort of potential compliance violation. Now it's becoming increasingly difficult. So the use of artificial intelligence helps them manage that workload. So that's probably the biggest use case and the biggest area that we hear about. But there's also certainly a discussion about how firms need to think about their own use of artificial intelligence, and if that becomes a communication itself that needs to be archived and monitored, or if they have a bot on their website that's communicating with investors, how does that fit into the compliance
God,
obligations?
I
that
didn't
they
even
have?
think about that. Like monitoring the bot, right?
Yeah.
Like it's got to be part of it.
Yeah.
Who monitors the bot that's monitoring the bot? That's the question.
Another bot.
Yeah, okay, there we go. So what about when it comes to the AI? Are you deploying the AI, or is the AI being deployed by these companies internally?
For the surveillance and monitoring. We help the customers deploy that, but it's with their own their own input in terms of what they want to look for and what they're trying to use it for.
Have you had to make specific hires around that type of technology in this environment?
Many. Yes,
So
yeah.
how is that? Because I mean, it's like a serious talent war going on.
Yeah, I mean, I think we've been very fortunate that our use case is interesting. I think to the professionals that get to work on artificial intelligence. We've got very large data stores, high significance use cases that get people excited. So it's always been relatively easy to find high quality tech talent at Smart, just because we've got high security use cases, big data, always on the cutting edge of the communication tools that people want to use.
So they want to be a part of it. Yeah. I'm just thinking about the Bloomberg audience, investing audience, just people who want to know on trends and waves. Just got about a minute or 45, 50 seconds left here. What do you think they need to know about kind of the world that you're seeing in Smart Connect, like the leaders that are here, whether it's AI, compliance, technology? What do you think they need to be aware of?
I think they need to be aware that we are working as hard as we can every single day to make sure that our clients can continue to use the communication tools that they want to, which in essence is really just allowing investors to use the communication tools they want to use when they engage with their financial professional. It sounds like a relatively simple order, but
yeah.
it's a big ask because there are so many different ways that people want to communicate, and everybody has their own unique preferences. We're out there working with our partners and our employees to try to make that all possible.
Well, we talk about transparency, right? Or making sure that financial systems are fluid and they work really well. Like this is a part of it, right? It's kind of a cog in the wheel, if you will, in terms of doing so. Thanks so much. Thanks for inviting us here.
Really cool
Thanks for
stuff.
having me, and I'm glad you could join us.
Yeah, it's really fun to be here. We would like to be outside, though. It's really beautiful. Can we work
Next
on
year?
that?
Next year, do it outside. We'll do it outside.
Just kidding. Steve Smarsh, of course. He's founder and chairman of Smarsh. We are here at Smarsh Connect in Midtown Manhattan. I'm Carol Massar along with Tim Stanovic live here on Bloomberg Business Week. Conversations are continuing. We're going to talk more about digital transformation and the role of all of it in compliance and managing risk for firms. We're coming back right here on Bloomberg Business Week.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
But it's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level up your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Corporation to move their risk and settlement systems to the cloud. And those are the type of crown jewels in the industry that you are always aspire to run. And I think that was a twinkle in our eyes when we started on the financial services side at AWS. And now it's sort of the reality of what we're bringing to the industry.
I mean, safe to say, John, when we break down like Amazon earnings, we talk about AWS, it's like streaming, right? And we're talking about the cloud. And I think so much of general consumers, that's what they think about. How much of what you do in the cloud is financial services based?
Well, for me, it's 100%.
For you, okay,
right.
Yeah.
But for AWS, it's a large chunk of our business. We don't break down the individual segment, but financial services is just one of the largest consumers of technology, as you can imagine. Of course. And just because so much of what they do is just moving ones and zeros and data around, almost everything is dependent on technology. And when we look at where our customers are focused, it's bringing more personalized experience with less friction and bringing down the kind of costs across the industry.
I just want to jump in with a red headline crossing the Bloomberg terminal. It has to do with Boeing. The Boeing whistleblower is set to testify at an April 17th Senate hearing. That Boeing hearing has been confirmed by a spokesperson for Senator Blumenthal. Checking in on shares of Boeing right now in the after hours. Shares of Boeing right now moving, well, really unchanged as we speak, but did fall about 1% today.
Right, we had some news earlier today in terms of Boeing deliveries. Getting back there,
1.89% today, excuse me.
All right, good to know. John Kane, we're talking with Head of Financial Services Market Development over at AWS. What are like some of the top priorities that clients come to you and say, here's what we need to make sure that we're going to play with you in your cloud, in the Amazon cloud or AWS, and just what is top of mind for them in terms of security and risk and compliance?
Yeah. So I think that's the secondary concern. If we think about sort of why firms adopt cloud,
First, it's to change the business dynamic, right? It moves them from having to make 3- and 5-year capital investments to being able to buy what they need when they need it and only pay for it. And when you think about like a dynamic...
So versus on-premise enterprise.
Exactly.
Yeah.
And when you think about something like mortgage refinancing, right? Being able to tie your business costs to the volume of business you do as opposed to an investment you made 3 years ago, it allows you to be more dynamic from a product and services perspective, right? So it changes the way you think about your business. But security and operational resilience are table stakes for us to be successful in the industry.
Right.
Our primary focus, above all else, is making sure our customers are secure and their data secure, and that our systems are running as close to perfect as possibly can be.
But it also means that you guys are taking on that CapEx risk.
Yeah, absolutely. One of the benefits, though, kind of being at our scale and our approach to the business, is the larger you are, the more you have that ability to kind of work demands across industry segments, and they offset each other. And if you're very much thinking about it from a financial services perspective, it's a little bit like what a clearing house or a clearing broker brings to the table. If they have some customers are long position, some customers short, they can manage that risk better than any one participant can. And from a technology perspective, we take advantage of that kind of scale to be able to do the same thing on behalf of our customers.
Is Gen AI, generative AI, changing any of that? Because, we've been having discussions kind of back in our newsroom about the on-premise enterprise and whether or not there are going to be companies, whether it's financial or otherwise, that are going to do kind of a hybrid approach and want to have some facilities on site that maybe there is some data information or processing that they want to keep kind of closer to home versus tapping the cloud. And I'm curious how that is impacting your discussions you guys are having around that.
Yeah, I think of it in a different way. So almost all our customers start on premises, and we have to work with them from a hybrid perspective to help them take advantage of the cloud. And we want to make that infrastructure look as transparent to their existing infrastructure as possible. I think Gen AI, though, accelerates the move to the cloud as opposed to kind of keeps it on-prem. When you think about the sheer computing power necessary to drive these foundational models, to kind of see that expertise, it's beyond the ability for most firms to be able to make that investment, right? When you think about the risk you're taking to buy that much specialized compute at scale to train essentially almost all of human knowledge to kind of build one of these models, you can't take that risk on as an individual enterprise. You've got to figure out how to leverage kind of best of breed providers. And we have the ability to kind of invest enough in our infrastructure to specialize it so it works both at scale and at a lower price point. We even build our own silicon chips to actually make those things more efficient. So we see, especially in the generative AI space, that need to leverage the cloud to be successful in building new foundational models. But more importantly, how most of our customers are actually going to take advantage of it. They're going to use one of the existing foundational models that are out there from an Anthropic or kind of a Meta or Cohere and want to use it themselves. And we want to make that available. And we want it so they can use it right away, right? So they're not going, hey, how do I build out a technology plan? How do I finance this with my CFO? It's like, oh, great, we can go try this, right? And we make that immediately available. And we think that just accelerates the value of AWS.
So you're not seeing really any kind of shift in terms of people wanting to have it more on-premise?
No, actually, I think it's just the other way around.
It's the other way around, okay.
Yesterday, Jamie Dimon over at JP Morgan Chase, his annual letter, he likened AI to the steam engine. Do you believe we're at an inflection point that is indeed that drastic?
I think it is. When you talk to our customers, the sheer amount of ideas that are both driven from top of house from the CEOs that are saying, look, generative AI is a priority for us, right? We need to think about how this changes our business, but also sort of from the rank and file. Anyone who's ever gone to a GP bot and actually asked it questions sort of suddenly understands how efficient they can drive their own business. It was travelers who kind of in their own use of generative AI, so saved $100 million from an operational expense perspective just by automating those tasks that tend to be very document, labor, human intensive to kind of be able to be more efficient. We're talking at the Smarsh conference today, from a compliance perspective, we've seen firms like Nasdaq's Verafin, who does anti-money laundering, be able to reduce, the time it takes to investigate a fraud alert by like 60%. And when you think about those operational savings at scale, you're seeing sort of just huge excitement about the potential for adoption. And I think we see it really being embedded in almost every application. So no matter what you use, it's almost going to have that kind of capability embedded.
Is that what's kind of surprising? Because we do, John, we talk about that AI is not anything new. It's been around. It's just now we're talking about kind of next level, right? When we talk about machine learning and generative AI. But I think about our audience who are listening, like what would surprise them about what you are seeing when it comes to generative AI and the usage? It's not just about what it maybe can do. It's what it's already doing, it feels like, in many ways.
Part of it is that the pace of change over the last year has been so dramatic in just what the models are capable of.
Really?
Yeah. I mean, we saw just sort of, we work closely with Anthropic, kind of making an equity investment in them, and just sort of seeing the difference between sort of Claude 2 and Claude 3 in both its performance, but also its cost. And that's over less than a year period. And what you're seeing is that there's such a variety of models, and the models are getting so much better that it's not just that you're seeing immediate benefits in production with some of these productivity applications, is that you're all thinking, oh, gosh, if this keeps going, this is going to change the way I look at almost everything. And, you know, generally I don't focus as much, but we're seeing that on the developer productivity side.
Right.
If you're a programmer and you're looking to write code or update code, the tools are getting so powerful, and you're just seeing these massive efficiencies and being able to kind of innovate from our product side. It's hard to know where it stops, and I think that's why everyone's so excited.
I should note the investment in Anthropic is a huge investment, an additional $2.75 billion just a couple of weeks ago.
Yeah. Well, and then the second tranche. And
exactly.
As part of that, not only do our customers get the benefit of being able to use the Anthropic model, Anthropic's committed to sort of integrating with our platform to get better price and performance for our customers.
Yeah, so interesting, the integration of it. John, thank you so much.
Oh, my pleasure.
This was great. John Kane, Head of Financial Services Market Development over at AWS, joining us here at Smarsh Connect.
Hey, let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The Arizona Supreme Court has ruled the state can enforce its long-dormant law criminalizing all abortions except when the mother's life is at stake. Arizona Democratic Attorney General has said she will not enforce it, and neither will Democratic Governor Katie Hobbs. She calls the ruling draconian.
We are 14 days away from this extreme ban coming back to life. It must be repealed immediately.
Doctors would be prosecuted under the old law that dates back to 1864, before Arizona was even a state. The parents of Ethan Crumbley, the convicted shooter of the Oxford High School massacre, both got 10 to 15 years in prison for their roles. Both James and Jennifer Crumbley were convicted of involuntary manslaughter for not doing enough to stop their son from carrying out the crime. During victim impact statements, Steve St. Juliana, the father of victim Hannah, says that the Crumbleys spent too much time blaming other people.
They blame everyone but themselves and make threats of retribution. The facts have already been presented. The jury has found them guilty. Hannah, Madison, Tate, and Justin are the ones who have lost everything, not the defendants.
James and Jennifer Crumbley maintained they could not have known what their son was capable of, even after getting warnings from his school. British Foreign Secretary David Cameron met with Secretary of State Antony Blinken and stressed the two governments are in lockstep on Ukraine, the Middle East, and the need to strengthen the Atlantic Alliance. Cameron also expressed what he'd like to see happen in Gaza.
We have a temporary pause. We turn that into a sustainable ceasefire. We see Hamas leaders removed from Gaza to have a political process that brings the war to an end.
Cameron also says that continued support for Ukraine is, quote, simply the right thing to do. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
My general advice is continue to seek out companies or people that are maybe one stage or two stage ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I played drums in bands and toured America with them. Did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger. But drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that. We'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the fire line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
In Midtown Manhattan, we've stepped outside Bloomberg headquarters. They're going to bring down the volume a little bit, but it's exciting.
Because people are partying.
Well, it is. People are partying. It's a moment where they bring in clients and customers, and they're talking things like technology, they're talking AI, they're talking compliance, and so there's a lot of good energy.
Well, speaking of AI, Carol, Intel rolling out a new version of its artificial intelligence chip, aiming to challenge NVIDIA in one of the fastest growing parts of the semiconductor industry.
Right, out with an updated processor. It will be widely available in the third quarter. It's designed to boost performance in 2 key areas, helping train AI systems, and also a process that involves bombarding them with data. We know that, and also running the finished software. It's all about AI. We know that. We've been talking about it nonstop for over a year now, and someone who knows a lot about it is Brandon Carl. He's Executive Vice President of AI and Product Strategy at Smarsh, with us on site here at Smarsh Connect. So good to have you here with us.
Thank you for having me.
Thank you for inviting us, actually. We're here in your home. AI, there's so much going on. every day. AI is not new. We know that. We say that all the time. But next level, machine learning, generative AI, and what it can do. How do you get your head around what really matters? It's something we ask our AI reporters. What matters, what doesn't? How do you figure that out?
One of my favorite quotes in this space is AI is always what the computer can't do now, right? And what it could do yesterday. And so when you take a look at this, what we take a look at is what is the outcome the customer is trying to achieve. And when we look at things like AI and machine learning, there are about a dozen different technologies we use in terms of taking customers into production and their software. So when we use these and when we see things like generative AI, there are incredible new things that this technology can do. And that enables us to do incredible new things for our customers.
I think back to when AI got on a lot of people's radar, not people in the space, but like investors who really started to think about it as a new category for them, or lay people really. It's this idea of like kind of playing with ChatGPT for the first time, perhaps in the fall of 2022. When did it get on your radar?
A long time ago. So we have been...
How long?
We started work on natural language processing back in 2000. It was a company Smarsh acquired called Digital Reasoning. And then we started working with the financial services industry in 2015 and 2016. And we started doing very large-scale deployments then. So we've been working for a long time.
Why was there such a long period of time between 2000 and 2015, 2016 when you started actually implementing it?
Sure. The early customers were actually government customers who were interested in national defense and security. And it wasn't until after the LIBOR crisis, you had about 3 to 5 years where budgets increased and suddenly people said, there's got to be a better way to keep the markets safe.
How does crisis and lawsuits and fines and things like that kind of shape what you guys are doing, and you particularly?
Sure. I would like to think that the industry could be wildly proactive, but typically what happens is some event happens, right? And then firms get budgets and they say, we need to prevent that from happening again. So there really is a cause and effect that plays out there.
Is it getting a lot more complicated, though?
It is, mostly because the number of ways people communicate has
It's something we've been talking about. I mean, it's been working for years on all the issues with WhatsApp, for example, just one platform. How do you deal with that?
To process more than 100 different platforms. And if you think about this, even 5 years, 300 million today. So whether it's Slack, Teams, Zoom, WhatsApp, WeChat, Line, Signal, like there are all different ways people communicate.
I was in doing research for this interview. I was trying to find information about how many messages a bank typically processes in a single day.
Yep.
Couldn't find that data anywhere.
Yep.
Give us some numbers.
Yeah.
It really depends on the firm and the type of firm. A typical employee is like anywhere from 1 to 500 messages a day.
Each employee, 1 to 500, yeah.
Yep.
Okay, so give us some huge numbers here about the processing that you're doing in real time.
Yeah, so firms can generate as many as tens of millions of messages every single day, right? And we will process billions and billions of communications. So if you imagine all of the comms coming together, that's what we really have to process.
If everyone's here today, who's processing the communications?
Yeah, I really, I'm worried about that myself, yeah.
I'm looking at the notes that your team shared with us and regulatory grade AI.
Yep.
What exactly does that mean? Because I do feel like it's going to be a term that we're going to be using increasingly.
Yeah, absolutely. So on one hand, people can log into ChatGPT and just use it, right?
Yeah.
But when you think about a regulated industry, you have to protect against things like bias. You need to make sure that you understand how things are actually working.
Yeah.
You need to make sure that you can rely on that over and over again. So it's really a higher standard in terms of how you approach things.
I want to ask you, because you do have probably, you guys in particular, have a great, we tried to ask Steve, like, who are your clients? But he's really quiet. But we know you guys are well entrenched, certainly within the financial sector. But I do wonder, Brandon, when you look at things, I mean, how equipped is the financial community when it comes to compliance and risk and transparency in a world where increasingly, as we said, there are more and more touch points that create risk, and in a world where there are more and more oversight and regulators looking for problems?
It's a hard problem to tackle, particularly for firms that have global regulation on things.
Yeah.
What I can say, we genuinely have fantastic customers within this space, and what you typically see is you see a handful of them really trying to trailblaze and lead the industry forward to make markets safer and to make their firm safer. And they help to trailblaze to create the paths for the rest of the firms to follow as well.
And bring along like their supply chain with them?
They, to some extent, their supply chain, but typically less so in what we do.
Okay.
I hear you and Steve speaking, and I think about another highly regulated industry, medicine, and also an industry that is trying to figure out how to use AI. Any discussion about getting into medicine? It has the HIPAA stuff when it comes to communications between patients and doctors. It has the regulatory issues as well. Is that at all? Does that all come up on your radar?
It does come up on our radar. We really look at regulated industries as areas that we can have the biggest impact. So pharma is one of those, energy is another, and then financial services. So we do think we can have some impact, but we're really squarely focused on solving these markets use cases as best we can in the near term.
So again, like I keep thinking about the Bloomberg audience. So what are you guys? I'm sure there are scenarios you play out. Okay, these are the risk scenarios that we need to be thinking about in a world increasingly that is ruled by machine learning, generative AI. What are the risks that you think that we should all be kind of preparing for? Because we're not going to catch everything.
Yeah, we won't.
Unfortunately,
we won't catch everything. And typically what you'll see, sometimes you'll see nefarious bad actors within firms.
Right.
And then other times there are people who just don't know any better. And you really want to help the people who don't know better to say, hey, you didn't intend to do this, like this is the right way to do things. But we also have to keep an eye towards the people who are ruining the reputations of their firms or, other people who are trying to do the right thing.
So really bad actors.
There are bad actors, unfortunately, that are out there.
Are those usually internal within a firm in trying to have some sort of inside edge when it comes to making money, or are they usually bad actors from the outside?
It can be both, right? Typically, the outside bad actors are more from an information security standpoint, right? And sometimes there are people internally who are just trying to make a buck and not do the right thing.
AI, the conversation in a year from now, just got about 30 seconds left here.
Sure.
Do you think it'll be dramatically different or just more of the same?
It will keep improving, absolutely. And we need to keep figuring out how we can actually use these technologies in the right way to improve the world.
All right, really interesting stuff. I don't envy you because you've got a lot coming at you. Brendan Carl, Executive Vice President of AI and Product Strategy at Smarsh, joining us here on site at Smarsh Connect.
Really, really cool stuff. Hey, just taking a look at how the market's closed on this Tuesday afternoon. A mixed close, but the S&P 500 higher by a little more than 0.1%. The NASDAQ higher by 0.3%. The Dow closing pretty much flat.
Pretty quiet. We're all waiting for tomorrow's CPI report. That's at 8:30 a.m. Wall Street time, and that we will certainly be watching what kind of way it comes in, above or below. This is Bloomberg.
Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. GM's Cruise autonomous driving business is preparing to resume testing its robo-taxis with safety drivers in Phoenix, marking an important step in its attempts to restart service after grounding its fleet last year. GM up today by 0.9%. Tesla shares, by the way, up today by 2.2%. In recent months, Cruise has been in talks with officials in 20 metropolitan areas where it previously ran cars or had started mapping in preparation to run them. Elon Musk says he'll unveil a robo-taxi in August. That comes days after Reuters reported that Tesla was scrapping a low-cost EV and a vaguely worded denial from the CEO. Bloomberg Global car czar Craig Trudell has more from London.
It's a sort of open question to me whether or not this robo-taxi will be something that, the lay consumer will be able to buy. I think, the entire rest of the industry is to the extent they're still pursuing robo-taxis, they're pursuing them for, dedicated fleets, a company like Waymo going out to a city and trying to engineer its way to where those cars can safely pilot themselves around town.
Bloomberg's Craig Trudell in London. Tesla shares again today. They advanced 2.2%. West Virginia's treasurer has announced he is restricting 4 financial services firms from providing state banking services because he says they boycott the fossil fuels industry. Those 4 banks are Citigroup, TD Bank, Northern Trust, and HSBC Holdings. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stennebeck on Bloomberg Radio and Television.
It is Bloomberg Business Week. Carol Massar and Tim Stennebeck live from Smarsh Connect in Midtown Manhattan. Let's get a check on the latest world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hey, Tim. The Arizona Supreme Court has ruled the state can enforce its long-dormant law criminalizing all abortions except when a mother's life is at stake. Arizona's Democratic Attorney General has said she won't enforce the law, and neither will Democratic Governor Katie Hobbs, who wants the old law repealed.
I am calling on the legislature to do the right thing right now and repeal this 1864 ban and protect access to reproductive health care.
Doctors would be prosecuted under the old law that dates to 1864, before Arizona was even a state. The Maryland members of Congress and Governor Wes Moore met with administration officials to press for federal money paying for the full cost of replacing the Francis Scott Key Bridge in Baltimore. The federal officials from Transportation, the Coast Guard, and the Army Corps of Engineers will be briefing the House Transportation and Infrastructure Committee as soon as tomorrow. Norfolk Southern said it would pay $600 million to settle lawsuits over its train derailment in Ohio last year that spilled more than 1 million gallons of toxic chemicals and sickened residents. Bloomberg's Karen Moscow with an update.
The Atlanta-based company said the agreement will resolve all class action claims within a 20-mile radius from the derailment, and for those residents who choose to participate, personal injury claims within a 10-mile radius. About 50 cars of the freight train derailed on the outskirts of East Palestine near the Pennsylvania state line. Some cars were transporting hazardous materials and prompted an evacuation. The company said that the settlement does not include or constitute any admission of liability. It still needs court approval. Karen Moscow, Bloomberg Radio.
Nobel Prize-winning physicist Peter Higgs has died. Higgs predicted the existence of the Higgs boson particle back in 1964. It took 50 years to confirm its existence by using the Large Hadron Collider. He won the Nobel Prize in Physics in 2013. Peter Higgs was 94 years old. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg. Now back to Tim and Carol.
All right, Amy, thank you so much. Carol Massar, along with Tim Stennebeck, live here in Midtown Manhattan at Smarsh Connect. We're going to come back, continue these conversations on AI, technology, compliance, and risk. Having said that, a story popping up on our radar that's kind of relevant, I feel like.
Yeah, several AI startups are looking into the process of going public. This is according to an executive at the New York Stock Exchange, as the market for tech listings seems to be gaining a little bit of steam.
Yeah, this is Michael Harris. He's Global Head of Capital Markets over at NYSE, saying at an event today, he said, I'd say that the majority of The companies that are truly pure play AI focused are still mostly financing themselves in the private markets.
I.e. Anthropic, OpenAI, just raising lots of money.
We're finding that out. We just talked with over at AWS, just getting kind of a perspective on that.
Yeah, John Kane.
He did say, though, Michael Harris over at NYSE said, but we have seen a handful of companies that are at least exploring going through the process. So since ChatGPT was released in late 2022, a long list of AI startups have launched to build, as we know, generative AI services for consumers and businesses. We know there's a lot of investment money going at almost anything and everything AI.
Yeah, the startups have raised billions of dollars from venture capital firms and big tech companies, including Microsoft, Amazon,
We just
and
talked,
more.
as you said, talked with John Kane about their
Yeah,
involvement
to support
in
the high
Anthropic.
computing costs that are required to develop AI tools. But recently, Carol, there has been a clear demand for public offerings in AI-related ventures, specifically on Wall Street.
This is interesting. Harris, the individual over at NYSE, said most of the AI startups he's heard of that are exploring IPOs are focused on enterprise products. He also said that potential listings from AI startups, quote, may not necessarily be for this year.
Yeah, I mean, I think that makes sense for a lot of the pure play AI startups that we talk about that have raised billions of dollars in funding. I mean, these things are still in their early years. They're still